Hi, it's John Mousseau. I am the President and CEO of Cumberland Advisors and the Director of Fixed Income. It is Friday afternoon on May 22nd. I'll give you an update on the fixed income markets this week. Fairly calm, which is nice given all that we went through in March and April. So we saw the 10-year tick up from about 64 to 66 basis points. The 30-year bond probably ticked up a nickel from 132 to 137 this week. But the real story is the fact that tax-free bonds had another nice week with scales being cut or basically bumped by 15, 17 basis points. So something similar that we saw a few weeks ago. Stable treasuries, muni yields moving down. This is something that we've talked about before, the narrowing of spreads between markets. As the economy gets a little better, as we come out of the mess that we've been in, we would expect that gap to continue to close. You saw people talk about some more help coming for state and local governments. We saw Jay Powell talk about it again this week, that he could probably look towards Congress to get more help there. They endorsed it. Steve Mnuchin has endorsed it. So basically between Mnuchin and Jay Powell, the two big hitters out there, they're both pushing for more help for state and local governments. We saw the MTA Authority in New York access the Fed's short-term note program. This is what it's designed for. It's designed for issuers to help meet cash needs as you start to rebound economically. We think all of that's good. Municipal issuers had very good reception this week. Deals oversubscribed 4 times, 5 times, 7 times. So lots of interest in really high-grade municipal debt by issuers. One thing you have to think about is that as you get out of this mess, and we will, but there's probably going to be a point in time when taxes are going to get raised, and it really doesn't matter who's going to be in the White House because of all the government spending that's going on now that's helping us. So whether that top marginal tax rate goes from 37 to 40 or 41 or 42, maybe higher, the one thing you know about, no matter what the number is, a rise in the federal marginal top tax rate will boost the value of all municipal bonds, all other things being equal. So that's the wrap for this week. We hope everybody has a great Memorial Day weekend. Please stay safe, and we'll see you next week.
Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors, May 22nd. Pretty good bid this week. Most of it occurred Monday off of that positive news early Monday morning from Moderna, the biotech company working on a vaccine for COVID-19. That'll be a long, winding road. We don't know if it's 6 months out, 12 months out, 18 months out, and we don't know the success rate. We have a number of biotechs working on vaccines as well as different drug treatments to try to reduce symptoms and cut symptoms. Biotech is an area that we are long in both our U.S. ETF strategy and in our tactical strategy. Last week I mentioned that we would cover the strategies. How are we positioned in the different strategies? Let's start with U.S. ETF, which is our U.S. equity strategy. We did commit a little bit of cash this week in the large cap growth area, specifically in some names that produce really strong balance sheets. We want to stay as conservative on the balance sheets as we can, but we did push some money into the large cap growth area. That took our weighting down to 15% cash in US ETF. International, we're at 8-9% cash. We didn't do any buying this week. We are overweight Asia in our international portfolio and wouldn't mind adding a little bit there on any further pullback off of this China, Hong Kong scenario that has again reared its head from last year. We have again 8, 9, 10% cash. Some of the areas that look good: South Korea, Taiwan, their holdings, we'd look to add to them. Australia, New Zealand are not holdings, but are starting to trade well. Australia with a nice dividend yield as well. Tactical trend. Remember, tactical trend is a flexible strategy. It can be long equities, bonds, cash, could be long commodities. in some scenarios. Right now, it is primarily domestic equity complemented by cash. We're at about a 30-35% cash piece. Where are we long in tactical? Tactical tries to use relative strength and trend to get capital allocated to what is working in the market. So we're long large cap, primarily tech, with some healthcare. That's the biggest allocation in tactical trend, performing well. We did sell a little biotech 2 weeks ago. Call that feeding the beasts. It had a wonderful run, a 35% move, 40% move off the March low. We didn't lighten up there. Biotech has stayed strong. If we get a pullback there, we'll look again, either in XBI, which we own as an ETF, or in some individual issues that trade very well from a relative strength standpoint. We also take our U.S. portfolios and blend them with fixed income. The fixed income part of the business that John Mousseau speaks about, whether it's municipal bonds or taxable bonds. Right now, in our standard U.S. balance, we're 70% equity, 30% bonds. That's up from 65-35 at the beginning of the year. We have a flexible mandate there to try to analyze where we think money will be treated best 12, 24, 36 months out. So with bond yields in, for example, the 10-year being down under 70 basis points, we're pushing a little bit more money over to equities. So how I would describe our look on the equity side, our analytics and our view is we are cautious and we're trying not to get beyond our headlights. That's a term you've heard me use for a year and a half that we've been doing these videos. And I think it's time to even focus on that more. Why? 2950 on the S&P 500. 2950 is where we were in October, 7 months ago, prior to COVID-19, with pretty clear earnings numbers ahead of us. Under 3% unemployment. So we're back to 2950 with a whole nother basket of headaches. There's a concern on my part as a trader and investor that we may have just gotten a little too far out ahead of our skis in the equity market. So now we're going to be defensive, we're going to be conservative. We want to allocate capital on pullbacks to sectors that are working. Allocate capital on pullbacks to sectors that are working. That has to be the mantra on our capital allocation. Everyone have a great weekend. We'll see you next week.